All right, so it's been a few days. I've been in the lab and I've realized recently that, well, let me just show you. So I went back in time and these check marks show when my liquidity setup did show up, and the X's showed when it did not show up. So I wanted to differentiate what is the main difference between when it did show up and when it didn't show up. And one of the, well, big factors was Fibonacci. I saw that Fibonacci was a major setup that I was missing when these setups would happen. So, for example, just for today, um, woke up, saw 9:30 about to open. Delete this. I saw this right here. Pull down, pull up. I saw this retracement happening right now, and I know once New York opens, there is volatility. There's volatility included. So I scaled down to the 1 minute to get more precise entries, because I also noticed that with the 5 minute, I'm not gonna get an entry here, even though the setup with the Fibonacci did show up. So scale down to the 1 minute right here. You get an entry right here. You see price push down, push up, push down, push up. Once New York opens, a strong push up, enter. I entered amongst this candlestick, then I started pushing back up. TP at the 61 negative 61.8, or or a 1 to 3. You either making it go to 61.8, or making it a 1 to 3, or to the next higher low. But the thing is, with the higher low, um usually this setup only shows up when price is trending strongly. You see prices trending pretty strongly beforehand. There's not liquidity that has shown up here. Price is trending strongly. Trending strongly. See here, liquidity has been built here. You see liquidity. Here, liquidity as well has been built right here. Here, liquidity hasn't been built. Strong push down, and prices you likely going to continue this during New York, for the most part. Sometimes this setup isn't gonna work out, like over. Where was it? Here, I'm pretty sure. Yeah, over here. Yeah, like sometimes you're gonna see price will come down. You get the Or was this? I'm pretty sure. Was this down? Where did I have that? I can't scale down to 1 minute because this is too far back, but you'll see something like this or something. But this is like, it could go either way. You could see this as liquidity here, right? And then enter after the sweep all the way down. That's a trade in itself. Um, or price sweeps down here, but this liquidity, it goes either way most of the times. So, like a day like this, I'd be okay with losing, because this is like a pretty unreadable trade day compared to this one. This is where this is really readable. Price pushes down, comes up. Fibonacci right here, top of the 75%, top of this equilibrium range, starts pushing down. Enter right here, boom. And even on the 1 minute, you could get a way more precise entry. You could get an entry like right here, stop loss right here, TP all the way down to the negative 61.8. Or if you don't know where to have your TP, just go for a base 1 to 3. If 61.8 is like OD far, but or 61.8 won't fulfill this the negative 61, it won't fulfill the 1 to 3 risk reward. And also, like a day like this, price doesn't reach this range. Um, Also, another thing, I'm sorry, but when I see price get to the equal low, like say for here, right here, price breaks this, I put my stop loss to break even. Here, that wouldn't have worked. I'm not gonna lie. But in literally every other one that has worked, once price breaks that, break even. Um, Once price breaks through, break even. Most of the times it will work. Sometimes rare scenarios like this, it won't work. But you know, that's just the markets. It's gonna stop you out at times. But for this trade, I mean, again, you got to be okay with losing some trades. You could enter like right here. TP would have been probably would have got stopped out at break even here, considering price came up. I'm gonna be transparent. Like this probably wouldn't have been a good winning day, but you don't have to have a winning day every day. You know, you don't have to. You're gonna lose, and it's okay because sometimes you do have to lose. But sometimes there's like days like this where liquidity did show up, but there's also an entry here as well for this. Then you could just enter negative 61.8 off of these pullbacks, right? Again, negative or 50, negative. Oh, I didn't put it here. Negative 61.8. Usually, it will give the 1 to 3 will give you a good range. Also, here again, we know that price is pushing down. Boom, we enter off of this pullback. Price gets here, pushes down. You can enter here. Stop loss above here. It goes to the 1 minute. I don't know if I'm gonna be able to on this for 16th. Yeah, probably not. Okay. Oh, we could look right here. See price push down. We already saw this on the 5 minute. Price push down. Price is pulling back up. Or you could have. Hold on. Let me see this on the 29th. 5 minute. Yeah, probably when I had placed the Fibonacci here, probably would have placed it on a more significant pullback. So right there, I would have placed it on where it already is. You see a push down, price pulls back up. See this strong push down, you can enter here. Stop loss above this area. TP negative 61.8 right here. You know, I mean, this is another model. It's just another model for when price doesn't play out how my higher um probability model does with the liquidity. And we see again, push down, pull back up 50%, enter off of here, boom, wait for price to break through, breaks through, break even, negative 61.8. It doesn't quite get there, and sometimes it won't. You know, if I see it's chopping like this whole time, and I know this was New Year's Eve. So if I know price is dropping like this, yeah, you know, it's days like this where you just gotta use your common sense really, and just know that price probably won't continue pushing down, or if it's choppy like this and it's New Year's Eve, you don't want to hold your trade for New Year's Day to be for anything to happen. We saw what happened with the U.S. market with Venezuela. We saw what happened there. You can't predict that. You can't predict that, and you see this huge push up. Your trade is over here. Well, this market doesn't really show it correctly because on futures it did push up, but say in a rare scenario, you're getting stopped out all. You're like, bro, just close the trade out. You know, but for like here, we see price push down, push back up, see off the second, off like a strong push down, enter right here, stop loss above here. We also see that price had a reaction here, and I'm pretty sure on the 5 minute this was also a fair value gap as well. That price tapped back into so many confluences right there. You wait for price to break through right there. Once it breaks through, break even, you're in a risk free trade. You just let price rock. I'm not exactly too sure. I have my TP down here. Let me see. Yeah, it should have been like right here. Could have also entered again, even off of here. Price does it again, gets to the 61.8 as well. Like it's clockwork, you know. And today, price got right back to the 50% for this trade, and continued back up. So you could have re-entered off of here. You go to the 1 minute. See that price tabs back here, closes above this bearish candlestick, pushes up again, enter right here, boom, boom. Could have entered back to this high for better risk to reward, or 61.8, less risk to reward, but you're more confident that the trade will play out. Let's go back. And here's a pretty rare scenario where price doesn't exactly tap all the way back into the 50%. Like here, price only tapped, it didn't even tap into the 50%. It tapped like between the 25 and 50. So, but once I saw that strong confirmation, I'm entering. If I get stopped out, I get stopped out. You know, you're not gonna win every trade. You gotta keep having that mindset. You're not gonna win every trade. I don't know why there's two trades there. Okay, so I had two scenarios. But you see price tap into the 25% immediately off of New York Open. Price pushes strongly up. You enter off of that. Strongly up, comes back down, continues pushing up, and hits the negative 61.8. It's clockwork. Yeah, this is just another setup, another model for my entries. But for today, I was able to get this trade off. Saw this, boom, entered. TP right here, boom, easy. No liquidity setup was really formed here. I'm not looking for press to push all the way back down here, then push up. You know, if I'm seeing liquidity, I want to see it like something like this where price is near the liquidity and it just needs to tap it, then push down. Or it's near it, it takes it out here. No, no, not here. It was up here. Takes it out here. Boom, pushes down, and then we see a pullback. Boom, enter. But would have got it stopped out of this trade because we do see price pull back some more. But could have re-entered. It is outside of New York session, however, so probably could have cut your losses there. But also could have re-entered just out of confidence for the trade, or just got your losses, of course, because you would have had this trade already. I'm going down here, so yeah. But that's basically it for today for the entries that I've been looking at, and I'm going to continue studying this, um, seeing flaws in it and see how I can improve it. But yeah, thanks a lot.